Listen up, primates. Everyone's asking why people are saying the OG schooled the new kid. Here's what happened. Leopold Aschenbrenner built one of the hottest AI-focused hedge funds in the world. His long-term thesis on AI may still prove to be correct. But the fund reportedly used heavy leverage, around 4 times, which meant it wasn't just betting on being right. It was betting on being right on the market's timeline. That's the part many investors overlook. In investing, you can have the right idea and still lose money because markets don't move according to your schedule. They move according to their own. Leverage amplifies that reality. When prices rise, leverage can significantly increase returns. But when prices fall, losses are magnified just as quickly. Eventually, the question is no longer whether your thesis is correct. The question becomes, can you survive long enough for it to be proven right? Then sentiment shifted. AI stocks sold off hard. As leverage tightened and prices fell, situational awareness reportedly became a forced seller, unloading much of its public equity portfolio during the sell-off. For anyone unfamiliar with how hedge funds operate, this is an important lesson. When a leveraged position loses enough value, lenders can demand additional collateral. If that collateral isn't available, positions may have to be reduced or sold, not because the investor suddenly changed their mind, not because they stopped believing in the future of AI, but because leverage can remove the luxury of waiting. Who reportedly stepped in to buy? Citadel. Around the same period, Citadel had publicly discussed the possibility of surprise interest rate hikes. While the timing caught the market's attention, there is no public evidence that Citadel's comments caused the sell-off or influenced market psychology. What is publicly known is that Citadel reportedly acquired a significant portion of situational awareness public equity portfolio after the fund came under pressure. If that's how the sequence played out, it's one of the coldest reminders of how Wall Street works. Not because Ken Griffin necessarily had a better AI thesis, because he had the stronger balance sheet, because he had liquidity, because he understood that markets don't just reward intelligence, they reward survival. That's one of the biggest advantages of having capital during periods of market stress. When others are forced to sell, investors with strong balance sheets often have the freedom to buy, not because they can predict the future perfectly, but because they aren't being forced to make decisions under pressure. There's an old saying, when a man with money meets a man with experience, the man with experience leaves with the money, and the man with the money leaves with the experience. Today, many investors are joking that this time, the opposite happened. Whether that comparison is fair is up for debate. But what we do know is this: when leverage meets volatility, someone becomes a forced seller, and someone else becomes a buyer. That's the game. Markets don't simply transfer wealth from the wrong prediction to the right prediction. Sometimes they transfer wealth from the investor who must sell today to the investor who can afford to wait until tomorrow. The greatest fortunes in investing aren't usually made by predicting the future perfectly. They're made by surviving long enough to buy assets from people who no longer have a choice. That's why risk management beats being right. That's why liquidity is a weapon. That's why leverage is a double-edged sword. And that's why some of the biggest opportunities in history have appeared during moments of maximum fear. Because when panic takes over, cash becomes power, and patience becomes an edge. At the end of the day, this story isn't just about Ken Griffin. It isn't just about Leopold Aschenbrenner. It's a reminder that every investor, whether managing millions or investing a few $100s, should understand one timeless lesson. The market doesn't just test your conviction, it tests your ability to survive. And that's why the stock market is the greatest game on earth. Stay dangerous, stay invested, long paper capers.